Good day. Today we are going to look at the differences between the bank account and bank statement. So the bank account prepared by us as a business, there we're looking at the CRJ and CPJ. Okay. So the first one, items that appear in the bank statement but not in the cash journals. Now, what do we do with the items that are appearing in the bank statement but not in the cash journals? We need to take those items and go and record them in the cash journals, which is CRJ and CPJ. What are those items? The first one is a bank charges. So it is where the business, it is where here the bank is charging us for using their bank. Okay, so they are charging us. So this one, it must be recorded where? In the CPJ. And then we have the interest on overdraft. Sometimes it can be written as the interest on a debit balance. Why is it like that? It is because the bank statement, it increased on a debit. It increased on the credit side and decreased on the debit side. Meaning that in a bank statement, the overdraft, it must be on a debit side. If there's an overdraft, it must be on a debit side. That is why there's going to be an interest on overdraft or an interest on a debit balance. It's the same thing. It is the same thing. Then we have an interest on the current account. Okay, so interest on overdraft must be recorded in a CPJ. Okay. Then we have an interest on current account, which must be recorded in a CRJ. Because interest on the current account here, we are talking about an interest on the credit balance or the interest on the favorable balance, which is a positive balance. So actually this is an interest income. Okay. And then we have a direct deposit made. Direct deposit here, it can be maybe we have a debtor or we have a tenant. Let's say we have a tenant. So this tenant goes directly to the bank and then he makes a deposit. So when he makes a deposit, that deposit we will only see that deposit once the bank has sent the bank statement. So the direct deposit, it must be recorded where? In a CRJ. So we have a stop order or the debit order. Stop order or debit order. So this one here is recorded in a CPJ. For example, we use a stop order or a debit order maybe when we have an insurance. So we make an agreement with the insurance that they will be debiting or they will be taking a certain amount from our bank account. So when they are doing that, it's a payment, but with a stop order or a debit order. So it is recorded in a CPJ. And then we have the errors in the journals. So sometimes in the journals they can make an error. So if the error was made in a journal, that error it must be corrected there in the journals. Okay, it must be corrected there in the journals. So sometimes they can tell you that the amount in the bank statement it is correct, but the one in the journal it is not correct. So now we have to correct that error. One last thing. Sometimes we might have a deposit. We might have a deposit that is appearing in the bank statement but not in the cash journals. But that deposit, we must not record it anywhere. What could be the reason? One of the reasons is this. When we are preparing a bank reconciliation statement, in the bank reconciliation statement, there we record an outstanding deposit. Why do we record an outstanding deposit in a bank reconciliation? We record the outstanding deposit in a bank reconciliation because it is appearing in a certain. We record it in the bank reconciliation because it is appearing in the cash channels or in a CRG, but it is not appearing in the bank statement. So with that, we record it in the bank reconciliation statement, right? So we record it in the bank reconciliation statement because it is appearing in the cash channels, but it is not appearing in the bank statement. So we record it there in the bank reconciliation every month up until it appears in the bank statement. So once it appears in the bank statement in that month that it appears in, it is going to be seen as if it is not appearing in the cash channel of that month, but we know that it has already appeared in the previous month. So with that, we don't record that deposit. Same thing with the check or outstanding EFT. So we might have a check or EFT that is appearing in the bank statement, but it is not appearing in the cash channel in that month. But you will find out that this check or EFT, it was already recorded in the previous month. So now it is just appearing in the bank statement because it was not appearing in the previous month. So with that, we don't record the check or an EFT. And then we have the items that appear in the cash channels, but not in the bank statement. So the items that appear in the cash channels, but not in the bank statement, those items, they must be recorded in the bank reconciliation statement, BRS. They must be recorded in the bank reconciliation statement. So one of them is a deposit made after the bank was drawn up. Deposit made after the bank was drawn up. Right? Other one, cash payment, channel, electronic payment made after the bank statement was drawn up. So what does these two mean? It means that a deposit may not appear in the bank statement because the deposit was made after a bank statement was sent into the business. For example, the bank sends the bank statement on day 25. Then the deposit is made on day 28. Obviously, that deposit is not going to appear in the bank statement. So with that, you must record it in the bank reconciliation up until it appears in the bank statement. Same thing with the payment. We make a payment we receive a bank statement on day 25. Then we make a payment on day 28. Right? Obviously, this payment is not going to appear in the bank statement because this payment was made after the statement was sent to us as a business. So this is how we should look at this. This is how we should look at this.